What's going on YouTube? Manifest Mitchell here today with a video about how to increase your net worth. If you haven't already, give me a like, hit the subscribe button, and let me know what you think in the comments below. Let's jump right in though with a couple of disclaimers before I start. The goal of increasing your net worth is that one day you'll have enough assets divided into different classes that are providing you in passive income. Enough passive income such that you don't have to work a job anymore. You can devote your time to your hobbies or your passions and maybe even doing something philanthropic that's going to serve the world. I will say that to increase your net worth over the long term, you have to make decisions every single day that are going to support you in building wealth. This is a long process that happens over years and years, and you have to put in consistent effort and make conscious financial decisions every single day. You might be thinking, who's this guy on YouTube? He's not a CFA or CFP or financial advisor in any way. And that is true. However, I can show you that I have increased my net worth consistently over the last couple of years. As you can see on this graph, my net worth as well as the amount of cash that I have on hand has increased consistently over the past couple of years. Now let me also say that I did make some investments in mutual funds before I started keeping track of my net worth. However, I stopped making those contributions quite a while ago, and only recently have I started investing back into a Roth IRA and mutual funds. And while I have had consistent growth over the last couple of years, you really want to be growing exponentially rather than geometrically. And over the last couple months, as I have started making investments again, my net worth has slowly started to exponentially increase. That being said, let's jump right into the first way that you can increase your net worth, which is to get out of debt. When you're in debt, you typically have to make minimum payments to other people to whom you owe money, which means that you have less money to use to build wealth and increase your net worth. Also, the money that you're actually giving these people is less valuable than you think it is because they're charging you an interest rate. In fact, the people that you owe money to are actually increasing their net worth because they're getting a return on investment of whatever percentage the interest rate is. So get out of debt as fast as possible. Use the money with which you were making payments every month and put that money into things that are going to build wealth. The second way to increase your net worth is to reclaim the value in things that you already have or downsize. Kind of a blunt way to describe this is to get rid of the shit that you don't need. While selling an item that has a certain value doesn't technically increase your net worth, you're just switching over the asset into a liquid asset. If you have stuff that you're not using around the house that's just kind of sitting there and not doing anything for you, you could use the money that is in that item to invest into an asset that's going to appreciate in value. The third way to increase your net worth is to increase your income. Your income is basically the best tool that you have to build wealth. The more money that you earn and the more money that you have is more leverage that you can use to grow your money. You might have heard of the phrase, the rich get richer and the poor get poorer. That's because the more money that you have, the bigger and better opportunities you have with which to grow your money. A lot of investments require a certain amount up front or a down payment. And so the more money that you have to use as equity or a down payment or a payment up front, you'll have access to bigger, more profitable opportunities to grow your money. All right, I've saved the best for last. The best possible way to increase your net worth is to put your money into appreciating assets. You might have noticed a common theme with the first three ways that I talked about, which is you want to free up as much cash as possible in order to leverage and put that money into things that are going to grow over time. One of the most common ways to do this is to invest into the stock market with mutual funds and index funds. A lot of these funds are really easy to get into. They don't require too much cash up front, and if you do it the right way, you can pay very low fees on your transactions. The biggest way that you make money off of these funds is their appreciation in value over time. Over the last 70 years in the stock market, we've seen about a 10% growth every single year, which, especially if you start at a young age, these capital gains will compound over time and you will see exponential growth relative to your initial investment in the funds. A lot of these funds also pay out dividends to their shareholders every 1, 3, 6, or 12 months, which typically most people reinvest that money back into the funds, and they will grow even more over time. I will say when you're looking at buying these funds, you definitely want to make sure and diversify your risk. You can't afford to be more risky if you're investing at a very young age because you have more time to hold on to your stocks and ride out the fluctuations of the market. I'd recommend diversifying your portfolio into maybe some growth funds, income funds, international funds, maybe some more aggressive growth, and then some kind of conservative bond funds as well. Another great appreciating asset is going to be real estate. This can come in the form of homes, apartments, land, commercial property, and so much more. What's great about all of these is that if you can rent out the properties, you can generate passive income from your tenants paying you rent. You'll also see some appreciation in value if you can hold on to these properties over the long term. Now, I will say that you want to make sure that you have good equity in these properties, especially in today's day and age where banks and loan companies are basically loaning money out like it's going out of style. Some states like Tennessee, where I live, will actually allow you to buy your first home with 3.5 to 5% down payment, which is extremely risky. You could totally find yourself upside down in your home before you know it. So make sure that you do have a good down payment, maybe 15, 20, 30, even 40%. One of the best appreciating assets that you can create for yourself is your business. With your own business, you actually own the entire income generating machine. You get to call the shots and the decisions that are made within the company. Now, businesses can be extremely risky, especially when you start tying up your own assets in your business. However, with high risk comes high reward, and businesses can really take off and generate a lot of passive income for you. Not to mention, once you have built a successful business, you have the option at any time to either sell the business or hire somebody to manage that business for you, which could mean that the business becomes a completely passive income source for you, or you take the money from the sale of the business and put that into an appreciating asset or a passive income generating asset. The last appreciating asset that I want to touch on is short-term lending. I think of this as reverse debt because somebody else is borrowing the money from you and you're charging them an interest rate for that. Short-term lending is great when you're waiting to make a long-term decision with your money, but you can have your money tied up for as little as 6 months to a year and you're still earning interest on your money. It's basically the same thing as you being the bank and somebody borrowing from you. How's it feel to be on this side of debt? Thanks so much for watching today. Let me know your thoughts in the comments below. What kind of assets have you put your money into that have seen a great appreciation long-term or short-term? And what are the best ways that you have personally increased your net worth? I'll catch y'all on the next video. Thanks so much for watching.